Most people invest wrong their entire lives. And it's not because of a lack of information. It's because of an excessive illusion. Maybe you've invested in so-called good stocks. Maybe you put your money in funds recommended by your bank advisor. Perhaps you tried private pensions, safe fixed income products, or jumped into crypto right at the peak. Maybe you even chased that one opportunity everyone swore was and yet, years have gone by, and your financial life is still basically in the same place. Meanwhile, it always seems to work out for other people. There's the cousin who picked the perfect stock, the friend who got into Bitcoin early, the influencer flashing screenshots of absurd profits. And you start to wonder, am I the problem? The short answer is, not exactly. But you're not the exception either. The market isn't broken. Investing isn't a scam. And the system isn't conspiring against you. The real mistake is much simpler and much more uncomfortable to accept. I used to believe that investing was all about finding the right asset, the right stock, the right fund, the right timing. I bought at the top, thinking, this time, it's going to work. I sold at the bottom, terrified of losing even more. I switched strategies dozens of times, always convinced that I had finally figured out the game. And every single time, the result was the same: frustration, anxiety, and the gut-wrenching feeling of always being late to the party. Until I realized something so obvious, yet ignored by almost everyone. The problem was never the investment. It was my behavior. Here's the truth nobody likes to hear. Almost all investments work in the long run. Stocks work, funds work, ETFs work, real estate works. What doesn't work is the average investor, because investing properly requires something most people can't tolerate: time, boredom, and self-control. People say they want to invest for the long term, but they react emotionally to every short-term fluctuation. 1 month of losses causes panic. 1 year without seeing results creates doubt. 2 years demand a complete new strategy. And that's when the classic investor cycle kicks in. Buying late, selling too early, and repeating this destructive pattern for a lifetime. The biggest mistake people make isn't choosing bad assets. It's investing without a clear purpose for that money. They invest short-term money as if it were for the long haul. They put their emergency fund into volatile assets. They treat emotional money like it's a rational investment. And the market does not forgive confusion. Investing isn't about making more money. It's about not doing something stupid for a very long time. But that doesn't sell well. It doesn't go viral. It doesn't get clicks. What sells are promises. Promises of fast returns. Promises of total safety. Promises of little effort. The problem is simple. Those three things do not exist together. Whenever you hear words like safe, guaranteed, automatic, risk-free, or fast, a warning light should flash in your mind. It's not a 100% certainty that it's a scam, but it's close enough that you should stay far away. The financial market is incredibly efficient at one thing: transferring money from those who look for shortcuts to those who accept the process. And here's a crucial point almost no one explains. Investing is not a mathematical activity. It's a psychological one. Most people lose money not because they chose the wrong investment, but because they couldn't stick with their choice. They buy when everyone is optimistic and euphoric. They sell when everyone is afraid and panicking. They ignore data and follow their emotions. And emotion is the most expensive asset in the entire market. Those who truly build wealth by investing do extremely boring things. They invest in a simple, straightforward way. They use very few strategies. They repeat the same process for many, many years. And most importantly, they don't react every time they feel something. That's boring. It doesn't make for a good story. It doesn't generate impressive screenshots. but it works. The average investor craves excitement. The successful investor wants predictability. Another classic mistake is thinking that investing is the main path to getting rich. It's not. Investing amplifies wealth. It doesn't create it from thin air. Most people try to compensate for a low income with more aggressive investments. That almost always ends badly. Anyone with little money should first focus on increasing their income, controlling their expenses, and creating a financial margin. Without this foundation, any investment becomes a source of emotional pressure. And emotional pressure inevitably leads to bad decisions. The market punishes anyone who invests money they can't afford to lose, no matter how good the asset is. Another factor that's constantly ignored is time. People massively underestimate the power of time and massively overestimate their own patience. Everyone says they think in terms of 10, 20, or 30 years. But they react as if every single month is a make-or-break moment. The result? They change their strategy before the strategy has had enough time to actually work. And when they look back 20 years later, they discover something brutal. They didn't lose money in one big mistake. They lost it in 1,000 small, emotional decisions. If you want to stop investing wrong, stop looking for the best investment, the perfect asset, or the next big opportunity. That's all just a distraction. The right question isn't, how much can this make me? The right question is, can I stick with this for 10 years without touching it? If the answer is no, that investment isn't for you even if it's a good one. Because, in the end, investing is a game of endurance, not intelligence. The market doesn't reward those who know more. It rewards those who last longer. The ones who can stay still when they should. The ones who don't panic when the chart plummets. The ones who don't get euphoric when everyone else is celebrating wins. Discipline beats talent. Consistency beats brilliance. And that's deeply frustrating for many, because it means there is no shortcut. There is only the process. If you want to invest correctly, you must accept this. It will be slow. It will be boring. It will often go against your every intuition. But it works. And those who understand this early on stop investing wrong, not just for 1 year, but for a lifetime. Thanks for watching. If this helped you see things a little differently, make sure to subscribe for more content that cuts through the noise. See you in the next one.